Hey, how's it going? Sorry, a little bit late. I was catching up with Melina and the husband. We're just kind of chatting on charts a little bit, so I'm up a little bit late to the stream. Sorry, guys. We are here now, though, and I did bring Melina in because she's going to bring the questions that typically you hear a lot on Twitter. So it's good to have her here for those type of things because it allows me to kind of gauge. Because I just honestly like I think differently, and sometimes I don't think from like a normal investor mindset. So it's always good to have somebody there to kind of like help out with that. But how are you doing this evening, Melina?
I'm good. I just went to an event, so I'm happy for us to go through charts and then maybe talk about life and like what people are saying and doing. And people are pretty doom and gloom. Anyways, in Canada, I mean, job losses and like everyone's got a side hustle, let me tell you.
Yeah, I think it's going to be probably kind of hard for a lot of the world outside of the U.S. Really, to be honest with you, again, it's not a political thing or anything like that. So I just want to be bears are crying. His comments, but like a lot of these countries, they've gotten a shaft right through tariffs and everything else. So they're having to find ways to kind of deal with this. And so, and understandably, some people may be upset about the countries, may be upset about that, and so on and so forth. But the reality is like, this is a good point for a lot of these countries to kind of figure it out and restructure what they have going on and try to, put the pieces back together instead of being very heavily dependent on the US. But I will say in the US, it seems like we're still kind of thriving. Um, Prices are still kind of crazy, I would say, across the board. One comment that I get a lot of the time, and I don't really pay enough attention to it, honestly. And it's not like I'm rich or anything like that, but like, like food prices and stuff. A lot of
Yeah,
people
yeah.
keep on discussing food prices. Some people discussing gas, but I will say this with gas, like this, and this is honestly like since 2022. A lot of people don't really realize this, but gas has been coming down since 2022. 2022 was like the pico high. It was like almost $5 a gallon here in the US. And I think like in 2023 or 2023, it was like 390 was like the pico high or 350, something like that. And then like I was talking actually with Marty about it today, and I think like 320 was 2024, and I think right now we're sitting around like $3 national average across the board. So I'd say like year over year we've been definitely shaving off that number when it comes to gas prices. And I know a lot of you came for the charts. I get it, but these are things to kind of discuss because you have to kind of understand where everybody's kind of sitting at financially, right? A lot of people want to invest a lot more, but they don't have a lot more to invest. And I would say definitely like if you're thinking about going out and putting yourself in debt to buy assets at this point in the game, I wouldn't do that. That's just not the smartest move. Just try to pay down debt. I would say would probably be the better recommendation, at least for right now. And then if you are in markets, like this is the part of the market where maybe you can shave and so on and so forth, which is something we're going to kind of talk about too with some of these charts. But we're really kind of trying to look and see where we're at, what we have going on, the plays that we're kind of getting into. One thing I was talking to you about, Molina specifically, was, and I, again, this is pretty interesting, but like I do get a lot of pushback from people on Twitter all the time. When things are bearish, I get a lot of pushback when things are bullish. I try to stay as level headed as possible, but like this is one play that I gave basically a lot of my followers, and a lot of people they think that I gloat because I'm posting updates on the trade, but I'm just trying to update people.
Yeah.
I'm not trying to gloat on the win, right? Um, but I mean, this is like a pico bottom play right here. Like we got in at 124, and if you look at
Insane.
prices, we're sitting around like 123.82 was the low. Like you can't get any lower than that. That's literally a bottom tick, I would say, when it comes to upside. Now, here's a lot of the issues is what do you see here for the most part, Melina? We'll say if we just like out of all this chart, what do you see right here?
I'm still new at this, Will. What do I see? Um
You see a high? and you see a low,
Oh,
right?
yes.
And so one thing that a lot of people don't think about, and it's because they try to overthink in these markets, especially on X, is they're not like, okay, here's where I bid, here's where I sell. Most simplest mindset thought process you can use. And you could do this with really good size too. And if you just looked at this market, to do that, essentially, you're looking at a 65% move every single month keep in mind, since March of 24. Every single month since March of 24, you could have been trading for 65% of a move. So if that's $100,000, right? Now you're at 165 on the first go around. Sell. Second go around, you're at like 200 something. Third go around, and this is month over month over month over month over month. And again, another reason why I took a long here was because we were right back at the same level.
Yeah.
So we can't always get caught up in what's going on with us personally. Sometimes we have to kind of think outside of what we have going on personally in our finances and all these things. And we have to think more about, what's going on with the chart. Where are we at in the chart? And how are things looking economically? Now, again, don't think too deep on the economic part either, right? When you think economics and you're playing in something like crypto, think U.S. economics, right? Don't think Canada economics.
Canada's cooked.
If you're thinking about, basically what's going on and what the next black swan is, and you can't come up with that thought process in your head, then really, what are we really talking about here? We're talking about a range that you need to be playing. And so essentially, again, just a 65% move. I'm just going to take this trade up to, probably about 170, 190. That should be about 500-600% return. And I'm going to cut it. It's that simple. And I think like if people think this way more than they think when's the next bear market, when's the next this, when's the next that, because there's no catalyst really right now, I would say, for a bear market, to be honest with you. Although I am a 4-year cycle, believer, I just can't really see a scenario right now where they just basically the markets come down. I mean, Trump is pretty much kind of signed on to crypto now. So if crypto takes a big crash, they're going to definitely blame him for it somehow.
Yeah.
So that's
so you're not expecting, well, I know we said that we were not expecting a bear until at least maybe Q1.
Yeah. I think like they could even extend this going into Q1. Right.
Mm-hmm.
And that's something I was kind of talking to Barty about too, because I was like, if they really want to take this to Q1, they could. Because the reality is like every pump, they retrace it back. So there's really no reason to come back to previous price action, right? And then you get this pump up here, they retrace it back. All this consolidation equals all this breakout. There's no reason to come lower anymore. And now you've got this breakout, and what do? You fully retrace back and fill in all so this right here is what you would call, see this body candle right here? So anything above the highest wick to the lowest wick is what we call an inefficiency, right? So you get a breakout, you get an inefficiency. And typically with crypto, you get multiple inefficiencies in a row, and then you retrace back to those inefficiencies, right? This is where a lot of people can't think outside the box. You're basically filling in the inefficiencies. And really, in reality, you never had to come back to 10K. You never had to come back to 13.8K. All you had to come back to was the wick. But where did they take markets? They took them a little bit lower, right? And that was just to scare people a little bit. So we basically tapped into all-time high, rolled into a little bit, and then kind of ran back up. The problem with this market is they're filling all the inefficiencies. All this right here, that normally causes all this keeps getting filled with these swaps. And so since they're filling these inefficiencies right now, it's really difficult to say without a parabolic move that we can get a real retrace, a real bear market like we typically get. It's getting harder and harder and I'm not talking about hopium. I'm not talking about, super bull. Like, I'm very market neutral right now. I'm not super bulled up. I hit the market at the right time. I played the upside. I'm glad I got in where I did. I'm happy with the gains I'm making, but I also have a point where I'm cutting, right? But at the same time, in my mind, I just can't see how we fill these inefficiencies and we're not going to continue pushing to the upside. It just illogical to me. The other thing is too, and this is something I talked to Marty about, and I've talked to you about this too, girl, in the verse, Melina. But typically, with my strategy and what I've put out there, and I put this out there for everybody to see. I don't hide my strategy. I make it very obvious because I have a strategy. I don't have to hide it. Typically, people that hide it don't have a real strategy. They're just bullshitting their way through it. Mm-hmm. But typically, I like to see 86 on the RSI before I see, and we talked about it before I say, okay, this is a sell position, at least an 86, right? This market has topped out basically at 78. That's not a sell side position for me from a strength perspective. It's not overly bought. And you typically want to sell the overbought. Overbought is between 86 and 96. That's extreme overbought, right? That's extreme hype. And when you get extremes, you should always expect whenever an extreme happens, you get a responsive extreme, right? People are looking for the responsive extreme, but we never got an extreme. We just didn't. The build is completely different than parabolic, right? Parabolic run up equals parabolic run down. Slow build up with inefficiencies is just a stair step. And stair steps don't stop until they go parabolic at some point. You need a heavy bid. You need somebody to get super hyped up, come and drop, 500 billion, 200 billion, 100 billion. And this thing to just absolutely go, Super Saiyan mode straight up. And if we got 3 months of God candles, like God candle into God candle into God candle, and they twat this up to like 170K in the next 3 months, we're probably going to go into a bear market at that point, right? You got the blow off top, you got the market interest to really kind of get people hyped and trapped. And the only way to trap people is to really push price. We haven't seen that. It's not there. And risk markets have been getting absolutely dumped on. And really, in reality, like, nobody wants to touch risk, which I think is, I think a lot of people are going to come to regret that. I really do. I think the risk markets, there's a lot of opportunity, and people are not looking at that at all. They're literally just looking at what everybody else is chasing, right? Everybody's looking at Bitcoin. Nobody's looking in the risk sector. And because nobody's looking in the risk sector, there's a lot of opportunity over there that you can pick from. And you as a regular investor have a lot of choices. I can give you a ton of examples in the stock market. I can give you, some examples in crypto. Like, I think Sui is a good play, right? I think that's a good platform. When it comes to crypto, I think it's a good L1 that will survive and do well and thrive. And has a really solid setup. Good.
So no, I was going to ask you, so we have someone in the audience asking, so I buy under 85, but I was also going to ask you about when you're cutting. When you say you're cutting, when are you planning to cut, let's say, for Bitcoin?
So leverage trades. No, 100%. Leverage trade. So the Solana leverage trade, I'm looking to start cutting around 170, and I'm going to completely cut out of the long around 190. And I'm not worried about if it can go higher. That's how people get trapped, right? That's how they round trip their gains. So I'm basically taking the leverage to the highest consolidation range, and then I'm cutting it. That's it. And then I'll take that leverage trade, and I'll likely go look for another leverage trade. So I'll look to compound that, right? I think there's a lot of opportunity to take one leverage, flip it into another leverage, flip it into another leverage, because I think this is just a stair step of what is leading to a blow off top, right?
Okay.
That's kind of what I think is occurring here. And so, I'm not worried about a Solana can go to 200, 250, 300. It's overvalued up here, in my opinion, right? And so I'm just playing this for the range, compounding that money and putting it somewhere where I can make even more money. So cutting here on that. Now, if we're talking Bitcoin, there's a couple key points we need to look at here with Bitcoin. One being right around this 100K mark, right? So that's a pretty detrimental part right here to pay attention to, because if we look at this, you can see right here, you've got a clear breakdown, right? And you have a clear distribution range. And then on the next one, you have a higher clear distribution range. And if they come up and hit the 100K and they start to play sideways at 100K, likely you're going to top out, right? And then if you top out, you're going to come back down. And not only you're going to come back down, you're going to come down in a big way, right? You're going to likely break structure, which means you'll break the higher low structure. So I'm giving you guys the bear case, right? I want to give you all cases so you guys kind of understand what specifically and how to play this. In the bear case, if they run this out, they'll plunge sideways for 2-3 months. They'll get you distracted with alts, is likely what they'll do, right?
Oh, alts are going to run, you mean?
Alts will run.
Yeah.
They'll get you distracted with alts. They'll rip this through, pull it back. They'll rip it through, pull it back. They'll rip it through, pull it back. They'll rip it through, pull it back. And then alts will start to absolutely explode. And then if alts explode and you're holding here for 1, 2, 3 months, you know where this is going, right? And it's going to roll. And if they roll, then they're going to run it back down to previous low here, right? So this high low will get broken. You'll then come into a equal low, double bottom. But the problem with the double bottom thesis is if they do that, I'm giving you the bear side and I'll give you the bull side, right? If they do the double bottom thesis, you're not just going to come down and hold here. You're going to likely play this range for a while, and then you're going to come back down to this range. Now, why are you going to come back down to this range? You're going to come back down to this range because this right here, and I talked about this the other day, becomes a head and shoulders, right? And a head and shoulders always ends below the neck. And below the neck will likely bring us back into the previous consolidation, likely bring us back into previous all-time high, and will likely may even dip down into this lower range, the 55s, 50s, so on and so forth. Heavy support from last cycle. Exactly, Blue. You got it. So I'm prepping you right now for what to look for and how to react if you see it, right? And then if this doesn't occur and this goes the other way, if this goes the other way, it's still going to end the same way, but from a lot higher, right? So if this goes the other way, essentially what they'll do is they'll push into the 100K range, but they won't just push to this, they'll push through this. They'll engulf the previous monthly candle, and then they'll likely push again, and then they'll likely push again. And then from there, then you're going to really get cooked, right? That's like the ultimate trap right there. So if they go that direction, they're going to really trap you. That's going to be your blow off top, and then they're going to wreck you really hard. So these are the two scenarios I can see played out here. This is why I'm bullish, because I want this to happen. I'm hoping that this is what they have happen, because if they do this, the money I have in the market is going to be worth a lot, right? And I know I can get out of this shit. But so 170K predicted top price. Where do I get that number from? So we've talked about this in the past. Again, just run the 1618 high to low, right? So this is 2017 high to low. Boom, hit it twice, right? 1618. And then if we run current market, right? We run high to low. Oh, hold on, cancel that. High to low, same thing. 1618 puts us at 174. So if they twop us up, this should be the range they'll hit. And don't think you're getting a double top if that happens. I do not think you'll get a double top. I think you'll get up here, they'll hold it for a bit, and then they're just going to start dump, bounce, dump, bounce, dump, bounce, and you'll just keep doing that.
And your dump I saw was like 56?
Yeah, 55, 56.
Damn.
This would be the ultimate trap, right? But it's also the ultimate opportunity if it occurs. So you got to look at it both ways. That doesn't mean like right now get bulled up and go, buy a shit ton of risk and buy a shit ton of BTC. I'm just telling you what to look for and how you should be reacting. And when you get to those prices, what you should be thinking, right? If you start getting to 160, 170, you start hitting those prices, you should be scaling out heavy at that point. It doesn't matter if they got the next runner, if something did 1,000x, the next day, ignore all that. Let those people get wrecked. Like that's your exit strategy. For me, like, and here's the thing. I'm not gonna lie, man. Like 2022, 2023, it had me confused for a little bit. But I got the bottom, but it had me confused if it was gonna hold for a little bit. And then I came across David, I forget his last name, but the dude was telling me how the SPY was going to hit 7,000. I think we were sitting around like 3,500, 3,000. I was like, this dude is high. Like, this dude is absolutely fucking high if he thinks we're going to hit 7,000. And this was right after we raised rates and shit like that. And then, bro, I couldn't have been more wrong. And so, like, for me, like, it's not about being like a super bull, although I've been very bullish this cycle. It's about just understanding the manipulation that can occur here. If they really want to trap people, it's going to be this option. It's going to be to drive this shit way higher, get everybody thinking that, hey, we're going to 250, we're going to 200.
Yeah.
And then get them trapped. Last cycle, Molina, like it was 100K. That was the target everybody was shooting for. What they do, they cut it at 170.
Yeah.
And everybody is bared up right now. If everybody's bared up, most of the people that are on Twitter coping right now, bared up, they're likely sidelined. You start getting to 150, 170, they're going to start putting their money back in the market. That's what's going to happen. Because they're gonna think the market that they were completely wrong and that this is the beginning of 2021. That's what they're gonna think. The second you start hitting like 150, 160, they're like, oh, this is 2021 2.0. And we're all the way down here. That's what they're gonna be telling themselves.
Yeah.
But really, we're like up here.
We're already there. I mean, the one interesting thing you've always said this cycle is that this was a boring cycle. Like, people would be slightly disappointed by the end of this. So I've kept that in mind too. It's just a bit slow move up.
A lot of people don't pay attention to that part, right? And I think that's one of the key points that a lot of people should really pay attention to, is like that it is a slow cycle. And because it's slow and boring, it's literally getting people to pay attention at some times and not pay attention at others. But I always try to tell people like this metaphor, and the metaphor is like a sleight of hand, right? And when somebody wants to rob you, they do a sleight of hand. So they distract you with one hand while reaching in your pocket with the other. And so what they do is they make the market drop, make you super bared up, get you to start taking short side positions in demand ranges, which a lot of people did at an 85K range. And then they trap you, right? And then they take your money. And then what do? Then they do the opposite. They run the market up. You think the market's topped. They run it higher. They run it higher. They break all-time high. And then what do? You chase and you buy the high. And now guess what? They've trapped you again. And what are they going to do? They're going to sell on you. And then what are you going to do? You're going to sell it minus 50%, minus 60%, minus 70%. So one side you got hit with a leverage trade. The other side you got hit with spot. So you've gotten screwed on both sides of the trade because they've messed with your mind and gotten you to think that certain things are going to happen at certain ranges. You got to be bullish on pullbacks and bearish on breakouts. That's basically it. And I don't mean like bearish, but I'm saying like you should be always taking profit when you're exceeding all-time highs. Now, one strategy I've worked out that's worked out for me really well, and I'll show you this one, Melina. It's a good one, by the way. I think is like, let's say I come into the market, right? And I have 25K, right? So 25K. And I started buying Bitcoin, 25K. And then here, that's 25K. And then up here, it's now 35K, right? Well, rather than taking this right here and selling here because I think it's going to come back down, I can just take off 10K and now that value is worth 25K again, right? So now I've got 10K to the side and that 25K is still riding. Now up here, again, that's worth 35K, right? Well, if I'm scared the market's going to dump, I can leave the 25K in and I could take another 10 off. And now I've got 20K on the side. And then up here, the market's worth what? 20, it's worth 35K again. Guess what? I take another 10K off. Now I've got 30K and I got 25K side on the side. Now you might be saying, oh, I'm losing compounding value, right? But what can I do with this 30K? Am I worried about losing compound value, or is there always another opportunity? There's always another opportunity. So then I take this 30K and I put it in another investment.
Exactly. Somewhere else. Exactly.
That's real compounding, right? You can buy alts with it. You can buy shit coins with it. You can buy other majors with it if you want to. But so you can take real risk with it.
What are we buying? What do the people want?
We'll talk about some buys here in a minute, but I wanted people to kind of understand a strategy.
But this was great. Yes. I have to learn this strategy because it's time for me to take profits. This is the cycle, guys. This is it.
And really, if you're in risk, you should be doing this the whole freaking way. Don't ask if you should sell. You're up 5x, take 3 off. Set that 3 to the side. You don't have to stay in this specific, not Bitcoin, but you don't have to stay in the specific shit coin you're in, right? You could take 3x off. All right, I'm secure now. And then you could take 1x, put it in your bank because maybe that's the money you use from a paycheck or whatever. And the other 2x you could take out and play with something else if you want. Like, people marry these coins. You're up, you're up. Take the up money, go look for other opportunity with the up money, and go into the other opportunity. And now other opportunity isn't shit that's skyrocketing. It's stuff that's flooring, right? That's other opportunity. Like,
that's the hard part, though. It's stuff that is flooring. That is like the stuff that's not sexy. So people don't want it.
I mean, this looks pretty damn good, right? And this is something I've been talking about for a while. I mean, you had a heavy drop. You're starting to build long, and you look like you're going for a breakout. You got to look for stuff that looks like this, not stuff that's just like down and to the right, right? You're not looking to chase some shit downhill. You're looking for something that has come downhill, kind of found its footing, and is starting to veer back up. That's what this is. This is what you would consider opportunity, not something that's just dying. And really, that's where a lot of people have a problem in these markets is they're not looking for things that are looking like opportunity. They're like, okay, Will says downtrend charts, and they literally look at something that's just down and to the right. It doesn't even look like it's even got a semblance of bottoming, or volume is 100% dead, right? If vol is dead, don't chase that. Don't chase it. Like even shit coins that I go into with medium liquidity, low liquidity, so on and so forth, I still look for somebody who's trying to snake in. I look for some volume, right? If it's had no volume for a month or two, it's probably really dead. Just don't even bother with it. You can pay attention to it in case people start trying to snake in because they're going to try some funny stuff and run it back up. But don't buy something with zero volume.
I don't see anyone talking about Rivian, but everyone's talking to me about Tesla. And that's another indicator for me, right?
Well, look, buy my Tesla stock, right? or buy my Rivian stock. You decide, right?
I didn't realize you had that set up.
Which opportunity looks better?
Tesla. Everyone's talking about Tesla.
Does this look more enticing than this?
Exactly.
Again, it's all about the eye of the beholder in some ways. Some people will be like, "Oh yeah, this is way more because of earnings, because of blah blah blah." You're feeding into bullshit at the end of the day. You guys just got to stop feeding into that stuff. Like, sure, Tesla stock can go up, but like, am I going to go buy Apple stock? Hell no.
Mm-hmm.
Why am I not going to buy Apple stock? It has zero growth. It's a no growth company. If I want dividends, sure, but I can likely find better dividends elsewhere. So why would I buy Apple? Right? Like people don't think. A lot of people are just like, oh well, big money likes Apple. Yeah, the 90% of the 1% of people own Apple, and it's like that's the top 1%. That's not you and I. We're not going to get any value out of a stock like that. And this is really like the world's a nasty place, but you got to really try to make it. And the only way to make it is take risk, right? Business owners take risks, investors take risks. And if you're just a worker, and I'm not saying that to downplay workers at all, right? You're probably taking minimal risk. And if you're taking minimal risk, you're not used to risk. And if you're not used to risk, then you don't understand the value you can gain from risk. And I'm not saying like go out again and buy some crap. Like definitely do your due diligence on the company, right? Do your due diligence on the crypto, do your due diligence on the layer one, whatever you're buying. But you got to look for value where value lies. This to me is value. This is a low cap coin, right? With value. And this right here, or not coin, but stock. And this is a very high cap stock with, in my eyes, very little value as far as growth goes. So I'm just not interested in low value growth, non-growth stocks. My cup of tea is growth. That's where I like to play. I like to play because I like the compound growth. Some people, they like to compound, dividends. And why dividends versus growth? Some people don't want to sell shit, right? So because they don't want to sell it, they want something that's like a stable coin that can just give them returns. So they buy dividends. And then they take those dividends and they compound those dividends. And then they don't even have to think about it at the end of the year. They're like, all right, I already know what my average is going to be. I know what my compound is going to be. I know year over year what I'm going to make. But you're always going to be consistently way behind the growth stocks. That's the thing that a lot of people don't understand. Carvana, for instance, again, we've discussed that one many times on here because, man, that was a big discussion in the bottom of 2022 where I was telling people, hey, this is really good opportunity on the stock. And it looked like it was bottoming out, and it did. And same thing with Palantir. Palantir was another huge, huge play for me. Dude, I got my aunt in. I talked to you about that, like really, really low on that one. She made
Yeah.
a lot of money on that play.
We can't talk about Palantir in this house because we sold too early. Well, there's someone too wrote here. My only regret was rolling Bitcoin profits a bit too early, around 70K after I bought at 20K. Yeah.
That's
I had
funny.
a friend today call me and say, I remember back in the day, like this guy was talking to me about buying Bitcoin. And I laughed at him and I decided I was going to go spend $90 on some Air Jordans across the street. And he's like, ask me where those Air Jordans are. He's like, I'm sure I would have had that Bitcoin. I'm like, I'm sure you wouldn't have had that Bitcoin.
If you look right here, see this drawdown, see this breakout, strength against price. And then what do you get? You get the reversal. Now, again, let's not even go all the way to the bottom. Like, look at your gains right there. That outperformed almost all crypto. Almost all of it. 8,000%. This is an 82x. Absolutely blew out Bitcoin on this one. I might actually try and do a Bitcoin Carvana chart, but this stock was literally looking like it was going to zero. But from a TA perspective, it looked like a good opportunity. And I got some people laughing at me when I was buying this. I had some people laughing at me. But guess what? I was laughing at the end of it because I like to bring this up every time now.
It's crazy. That's a good one.
And then this was another one too, right? I was buying Palantir again. Just remember, chart goes down, starts to veer up, right? You see the veer up and you're like, all right, this is probably going to be something where they're going to break out a little bit. And so I take the opportunity, I buy in pretty heavy, and then boom, they break out to here. They engulf the previous range. I'm like, oh, this is going to keep going. They consolidate, up, consolidate, up, consolidate high, up, consolidate high. And now you're going to consolidate again, just like this, right? And then up. Like, these are the things that don't look pretty at the time you should be buying them. But yet people are looking to chase shit that's like elevated versus stuff that's way undervalued. Exactly. And so this right here is a really good, or was a really good play. Now I wouldn't tell people to do it.
Yeah, you wouldn't buy it. Okay.
Yeah.
Got you. Yeah, we have questions here. Do you have Rivian? After Palantir here, do you have Rivian calls still?
Yeah. I'm still sitting in my Rivian calls as we speak. So okay. I think I was at the peak. I was probably up like 200%. I'll look and see what I'm at right now. I'm at 143% right now still. And yeah, I understand theta before anybody says anything. I understand theta decay. I understand, cost to leave your calls open. Like, these are all things we know as traders. But if you think the opportunity is bigger than the weight, then you take the opportunity. If you think the weight is bigger than the opportunity, then you take the weight. And right now I'm taking the weight on some of these because I think that there's a bigger opportunity coming or building, right? And so I'm sitting on these, even eating theta decay, even eating, positioning costs and so on and so forth for longs. So that's really kind of how bullish I am right now in this market. Like, I'm really bullish at the moment with at least the short-term breakout, right? Like, really, really bullish. And I think, like, even if we see small pullbacks, I'm unbothered by that. Like, even if Bitcoin were to come down and kind of retrace some of this move and sit down here and hang low, it really wouldn't bother me, even on a red month. Because, like, we've seen this, this whole scenario before where we've had drawdown, it turned into a green month, comes back down, turns into a red month, looks like it's going to bleed, and then they just reverse the market back up. So even if they wanted to do that here, it wouldn't bother me. Another thing too that I noticed that was pretty interesting here, and not a lot of people are talking about that either, is like, once you start to see this, right, that's a good indication of breakout. And then when you start to see this, a lot of the time this can mean, you're going to get a roll, and you did get a roll. But what we're seeing again, over here is this, right? And so we had this, which led to this. And if the month stays like this, again, we get a December monthly close like this, likely, you run into January, February, March, you're starting to run really high at that point. And that can really kind of pump up these markets in a big way. So if we take up bars over here and we run these up, you're looking at something like that, which will push you again just up into that 160, 174K range if they really wanted to run it up. And you don't need, and here's the thing, like a lot of people don't understand this. This will at least hit this 50 on drawdown. So that's why I'm also calling the 100K, because it's going to at least fill 50% of this candle body, and then likely it'll reject or it'll go above it. And if it goes above it, it's likely going to engulf the previous month. But if it pushes up to the 50 and starts to show resistance, then at that point, again, 50% of the drawdown, right? Because you have an inefficiency here. So we have to fill at least 50% of the inefficiency. And so they should push the price back up to fill 50% of the inefficiency. And that's even if this turned into a red month, it'll likely happen then probably Q1 versus this month. But if they fill the inefficiency, and then at that point they can run it back down, or they flip the range and they run this up. Now, this right here could look like this for 3 months. And if they do that, again, that's a blow off top for sure. But then nobody's expecting this, right? And as a trader, and I would tell you this too, Melina, as somebody who's learning, always prepare for multiple scenarios, right? Prepare for the best case scenario, which will still turn into the worst case scenario. Prepare for the worst case scenario, right? And so on and so forth. Because that's always going to be the best way to look at these markets. Everybody wants to look at things like, I have to look at them as bullish or bearish.
Yeah.
It's like, no, we don't have to look at them as bullish or bearish. We have to figure out, what are we going to do when we reach certain levels? How is our reaction going to be? And what are we looking for? And then what are we going to do if we flip certain levels? How is our reaction going to be, and what are we looking for? And then we have to kind of sell all this up in our brain or on paper, right? Some people maybe can't kind of keep that information there and they need to write it down. That's fine. And at that point, you set up your plan and you execute. You execute when you get there. If we went to 100K tomorrow and hesitated, should we panic and sell tomorrow? No. But I'll be taking profits on longs, right? If you're in leverage trades, I'll be taking profits on those. But if we're talking about spot, I would just kind of sit and wait, because likely if you're going to catch rejections, you can see anytime we hit a rejection zone, it takes months before you get the drawdown, right? But it'll be very clear that you're catching rejection within a couple months. You just got to pay attention to those couple months, right? And if you're on month 1, you're sitting below 100, but you keep poking through it. Month 2, you're sitting below 100, but you keep poking through it. Month 3, you start being like, all right, I think this is taking too long. We're on month 3, we're still below 100. Likely, I'm just going to cut positions and see what happens here, right? And then at that point, either you'll get a big breakdown, or they'll push price back up and you'll just have to buy a little bit higher if you want to chase, or you can just wait for them to just pump it and dump it. Either way, right? That's how you can kind of approach this at the moment. So we're really kind of waiting on this 100K tap, and then it's going to take a couple months to figure out what we need to do from there. So it's not something we're going to figure out next week, the week after, the week after. Now here's the trick though. If we flip that 100K this month and we body close above 100K, now we should just expect higher, right? That should be our expectation. And what we should be looking to do is setting up, and you could do this on exchanges really easily, setting up scale out positions, right? Where you're starting to slowly sell out of your positions as price rises and rises and rises. The Bitcoin is not going to be the next S&P. If it jumps like this, it's going to dump. 100%. There's too many whales in this thing.
So how much do you cut in between each level?
Scale out depends on you, right?
How much you
So,
want to?
yeah, how much, like, are you greedy or are you not greedy, right? Non-greedy people will scale out heavier towards the bottom end. Really greedy people will scale out towards the top end. That's why, like, you can't really tell people like how to approach it, because everybody has their own form of, greed to a degree. I call it greed, but just
Well, I guess
whatever.
that's why everyone's asking too, like when's the top, but you can never be you can't be sure, right? So you're better off starting and taking it out at the beginning.
Yeah, you want to scale, like, but you need certain signals before you can scale, right? So the signals are God candles. That's your signals all day. And when you get big dumps like this, you can't panic sell, and you sure as hell can't short. Like, if you didn't short up here 1, 2, 3, 4 months in a row of the same range, if you didn't short up here, why the hell would you short here?
Yeah.
80, 89 or below. This is why I think they're really going to take this to 100 and maybe higher, because I think they're looking to liquidate all these shorts down here, because the shorts landed in a demand range. Like, this is literally a demand range, right? You can see the highs over here. You can see the lows over here. Like, this is a demand range that they shorted into, which isn't the smartest idea. Now, keep in mind too, if you go back a bit to what we had right here, if we go back on the weekly, remember I brought this up on the weekly, right? And I said, right now, what we were fighting is the highs of this weekly. That's what we're using as support. And the lows of this weekly is what we're using as resistance right now. So until we can break through these lows, then our next target is these highs, right? And we're not really looking to target the wick highs. We're looking to target the body highs. So we're looking to hit that 100K. And again, if you flip that 100 and then you come up here, you flip 108, now you've basically engulfed the drop. And then at that point, you can run really hard. But right now, we're targeting 100. We're just kind of keeping things very, I say micro, but this is macro. But the funny part is how I just showed you here to here. Now look at this on the monthly. Do you see where we're at? We're actually well above previous body. So this is, again, it's a higher low into a higher low into a higher low structure. And not only higher lows, you got a higher high into a higher high into a higher high structure. And people are crying foul bear market tomorrow. Like, honestly, like, I don't even think that most people on Twitter actually trade. I think they just time things out and say, this is what it is, right? We're at the 4-year mark. And it's like, you got to look for other things other than just the 4-year. Like, for the 4-year market, or the 4-year mark for crypto, for Bitcoin, is not static 4 years, right? 360 something days or whatever times 4. It could be 3 months after, it could be 6 months after, it could be 3 months before, it could be 6 months before. I mean, look at this bull cycle. This bull cycle essentially started early, right? Earlier than anticipated for a lot of people. And so that's always the problem a lot of people have, is they can't think outside the box. They think very linear. They don't think more broad. And, like, when you walk into a room with your blinders on, you don't see what's around you. And that's what a lot of people do in these markets. But again, I don't blame the average consumer, the average investor, because they're unknowing of a lot of these, like, I would say, trap doors and tricks that the market sets for you. And market makers, I would say, even at this point, the government right now heavily manipulating markets. and then so on and so forth. Like these are all things that are like you can't foresee happening at any point in time. Trump could say buy now, and the market's going to pump. Right? These are things that can occur right now in this day and age, and I think that you can see a lot of that in the chart before he starts tweeting. And so you always have to be looking at the chart and understand where you are. And when you drop into a demand range, you got to understand, okay, I'm at a demand range. I'm starting to see bids. And where I first caught the attention of this position was when I saw the body candle, this body candle weekly close above these body candles. I was like, okay, I was all right. Let's let this play out a little longer. And then I saw this body candle push off of that and close above it again. I was like, all right. I was like, next drawdown, they're going to pump this thing back up. And they're going to hold it above, again, these body candles. So I knew anytime you come below these body candles, start looking for positions in other coins and see where they're at. And what I saw here is I compared Bitcoin, right, on this drawdown right here. I compared it to Solana. I was like, all right, Solana's at the low. They are right now below the range. They're going to likely bid this back up to here. I was only expecting to back up to here, right, to hold price range. And so I was like, all right, bid Solana. That's why I took the position on Solana, just to explain people my mindset, right? My mindset was Solana's at a good price range. Bitcoin is going to likely bid back up into this range. It's a good place to take a bounce play on Solana. So I was only anticipating a bounce. But now we're seeing them kind of push up higher. And if they hold this on the weekly, this is going to likely build, right? And it's going to build into the 100K mark. It's going to, and it only makes sense for this to happen too. Like that's the part like that blows my mind is people don't anticipate, but I guess in my mind it makes sense, but not everybody else's. It only makes sense for them to do this. Why does it make sense for them to do this? Because I can guarantee you, and here's the thing. I went on Twitter when everybody was screaming that, 35K, 50K, and I was watching people just swearing to people. We're going straight to 35 next week, next month, 50K. I sent you that message, Melina, too, where that person was like, oh, yeah, see you at 60K next week. And, I had all these people telling me how we were going way lower and we were sitting on a demand. And I was just like, dude, I was like, this market's going to reverse out this demand watch. And then so I just kind of waited and waited and waited and then started calling. That's why I started lighting up the timeline really quick, because I was like, all right, this is where you want to start picking up pace. And the market literally reversed right where I started calling. So like sometimes I go quiet on the timeline. It doesn't mean I'm not on the timeline. I'm observing. I'm just not responding. I'm not posting because there's nothing to talk about. It's literally just watching, a bunch of grown men cry on Twitter on how prices came down. And that stuff doesn't do anything for you. What you have to look for is opportunity. You can't be crying. You got to be like, all right, hey, maybe I took this drawdown. How can I make it up? All right, well, I guess I'm going to try and look for a leverage trade. So I took a leverage trade to make up the drawdown. And that is what it is, right? I took it out too. Like I didn't sell the freaking very top of this move, but I'm making it up right now. I'm up 200% on one play and another, 150 on another. So I've already made up my losses. Yeah, 3 rate cuts and they're crying for 35K. Exactly. That's the thing. And now rate cuts are going to continue. We're about to get a new Fed chair. There's a lot of bullish news, right? But don't feed into the catalyst. Those can change every day. But this is where we're at, and the market's looking pretty good. It looks to me like I know the dead cat bounce. I understand the thought process behind that. And look, I'm not shitting on people that think that's what this is, because I've explained the dead cat bounce theory. If it ends up being that means we push into 100, we roll, right? But don't discount that we can't flip this range. That's what I'm telling people, because you're going to be sadly freaking mistaken. And then if it does flip the range and you're sidelined, you're going to be feeling a lot of pressure to re-enter the market. The higher shit goes, the more pressure you feel. And so you can't be doing that. Remember, we scale in coming down, right? We scale out going up. Now you're not looking to scale out. Well, here you are, right? You're looking to scale out leverage trades, because leverage trades, hold on one second. Leverage trade should let me explain this part real quick, and then we'll get back to the scale spot and leverage. Right, they're two different monsters. Leverage should only be played level to level. Never play leverage to like go to the top of the bull market. Never play leverage to leverage all the way to the bottom of the bear market. Never play leverage to go to 3 levels below your current level. Never play leverage to go 3 levels above your current level. Look for where your price action is, where your support is, where your resistance is, your next resistance, and leverage only between those 2 levels. Only between your support and resistance. So HTS support and resistance puts my price action right where I got in a salon at the low, and it puts my sell position at 170, 190. That's the next resistance. 170, 190. I'm not looking for 200, not looking for 220, not looking for 230. I'm looking to play level to level. So leverage is only played level to level. Now, if we're talking spot should be scaled out anytime you start breaking previous highs, right? So you could be 25% here, you could be 50% here, you could be 75% here, but anytime you start breaking previous all-time highs, scale some money out. And guess what? If this thing absolutely goes apeshit, do I have to chase Bitcoin? Is Bitcoin my only investment that I can buy because it absolutely took off and I scaled out? Or can I catch up somewhere else? I can catch up somewhere else. That's what I'm telling you guys. Like, you just gotta play this smarter. Fusaka, I did tell a lot of you guys to take some, off the table. I know a lot of people keep talking about it.
Yeah, I was about to tell you. I'm like, everyone wants to know about Fusaka. What do we do?
I mean,
I guess people expected, since the new upgrade Fusaka, it'd probably do something.
I think if ETH starts, heating up the timeline with the word Fusaka, ETH starts, the Ethereum, foundation and so on and so forth starts lighting up and starts getting excitement around it, you'll start to see this thing really run, right? For this, it was just a lot of prep, and then now you're getting a little bit of profit taking, but I don't think it's cooked. I mean, you've held a really good range here for a long period of time, right? You had a little bit of buy up into the sell off into the Fusaka narrative. And then likely what you'll see is if the Fusaka narrative starts to ramp, starts to heat up, you'll see this thing start to run with it. That's kind of how you have to take it. I know a lot of people want things to be more dumbed down than what they are, but a lot of meme coin plays are longer term holds that you have to kind of set in and wait for the right opportunity. Now, if this thing starts running, definitely start scaling out. Take profits. Like, do not be like, hey, Will, we're above all-time high. What should I do? No, you should be scaling out. Doesn't mean you have to be 100% out. Doesn't mean you have to be 75% out, but you should definitely be scaling out. And up here at the highs, you could have shaved a little too, right? Especially going into holidays. I think any opportunities you see going into the holidays, some people should be scaling out some cash anytime they get a little bit of run. So definitely, be a little bit diligent about this stuff. And I don't come in here, to bash anybody or that they didn't take profits. And sometimes it sucks when you don't take profits. But I'm trying to tell you guys like how to treat each thing, right? Like we talked about memes. I'm telling you how to scale out memes. We talk about leverage. I'm telling you how to treat leverage. We talk about spot. I'm telling you how to treat spot. I'm not even telling you guys, like a lot of people will tell you to buy up. No, don't buy up. Let's say you miss an opportunity, right? When you get price action like this is called controlled price action, right? So this is controlled price action. And that's a microphone pattern, right? So you got tightening into expanding, dropping price action. Okay. So all I got to do is look for any time we come onto this line, I can bid. And I'm looking for the breakout. And then I can take profit. Now, let's say you're like, oh, well, how do you know where the high is? Again, 1, 2, 3, 4. 1, 2, 3, 4. How many months did you sit up here hitting a high? You're not just going to go up when you start resisting. You're typically going to reject, come down, retrace, tap liquidity, previous high, right? Tap liquidity, break out again, right? 1, 2, 3, 4. 1, 2, 3, 4. Again, you're seeing resistance again, right? So you got to take. I know I'm making it sound easy, but it is that easy. It really is. Like, people just have to be a little bit more, diligent about understanding what they're seeing. And these HTS will really help you, right? They'll really, once you start getting that third month and you're like, oh, this thing's really not going anywhere. That might be a good time to shave, right? Might be a good time to shave. And then you could take that shave money, you could rebuy the bottom. Now, here's the problem. Everybody wants to sell high, buy low, sell high, buy low, sell high, buy low, sell high, buy low. Well, what happens if you sell mid and then price is up here? Are you going to take that money and buy back in? No, take that money elsewhere. Take it elsewhere. Look for another opportunity. Don't chase this shit. Like, and I'm not saying like Bitcoin shit. What I'm saying is like, when you miss an opportunity in the place where you were intending to sell high, buy low, and maybe you sold mid, maybe you sold bottom, maybe you sold high, look for other opportunity, other investments that look better than the investment that you have going up and to the right, that you could put that money into and make more money. And I know you're like, well, nobody knows one of it. I just showed you one right there, right? This is a good chart pattern right here for Rivian. It's a really good chart pattern. So these are things that you got to look for. Like, if you're like, oh, well, I'll go buy gold, you're high. Why would you buy gold?
Buying and lining up.
Like, this is the kind of traps that get set consistently in these markets. And then, you keep buying into it. And then eventually, guess what? You're sitting in that thing for a decade with no profits. That's basically it. So take that with a grain of salt. And Ethereum too. Ethereum's doing pretty good. Again, just another one of those. Play the 50 for now. Flip the 50. You can engulf. If they want to run this up, they can run it higher. This was a pretty good run up right here. 1, 2, 3. Kind of looks like a blow off, but
10K,
really in reality,
10K. Will we're going to 10K?
Oh, you mean this, right? No, I think closer to 7 or 8, but
yeah.
Good.
So, so this is the thing, right? Everyone says 10K. So this cycle, what I'm trying to learn is, if it's at 7K, I can take some profit. It's going to be okay. I don't have to wait for the 10K. I think that's the thing, is people focus on that. This is the top 10K, 200K Bitcoin, 250 Bitcoin, right?
They're not scaling. They're trying to full exit at the right spot. And then when they mess up, and let's say Bitcoin, for instance, right? I guarantee a lot of people probably took profits around 110, 120. And the second Bitcoin got to 125, they probably bought back in. And that's the problem with these. Like, why?
Yeah.
You're chasing. People have to get, and I know it's hard, but people have to get away from this FOMO. They have to get away from it. And you got to stop. The only way to do it, really, to be honest with you, Melina, and we'll just kind of have a discussion here at the end. The only way to really kind of get away from this FOMO is to ignore everybody. Right?
Totally. Yeah.
Look for your own investments. Look for opportunities and things that you're looking at, and ignore what everybody else is saying. Like, I ignore like everybody on the timeline. I don't really, I honestly like, and I'm not trying to sound asinine or I would say like a narcissistic or anything like that, but like I just don't pay attention to other people. I pay attention to what I have going on, and I pay attention to what I'm looking at, and I trust my own instinct over other people's. A lot of people want to borrow conviction from other people. I can definitely, you know, I can give a man a fish. I can give a woman a fish, but it's only going to feed you for the day, right?
Yeah.
And you know, if you learn to fish and you learn to find opportunities, you'll do better off. Now, a lot of people are like, well, how do you find opportunities? I consistently show stuff all the time on here as opportunities. Another thing too, something I want to bring up. Now, I know a lot of people like to take shit that I say and run with it. Don't do that shit. I'm not talking to you, Molly, but I'm talking about the audience, but just hear me out, okay? I think there might be a new meta brewing. I found a couple coins. I'm not going to put them out there, but I think with that whole turtle thing with Pete Hegseth, or sorry if I butchered his name, the war guy or whatever.
Talking about.
So he did a the turtle. I forget what it is, the children's book turtle thing.
Oh, okay.
So he did a thing of him blowing up boats or whatever. So there's that whole drama with the boats thing.
Yes. Okay. I wasn't following you there.
Yeah,
okay.
the turtle meme, Matt. Exactly. I think that there might be a turtle meta that might be brewing, bro. I've been kind of looking at Franklin the turtle. There you go. Yeah, that's it. So I've been kind of trenching a little bit, right? I see some stuff cooking on there. I see some stuff cooking on there.
I was gonna ask you too, like, are you trenching? Are you looking at memes again? Because I know we talked about alts, but okay, interesting.
Well, I'm not always trenching looking to buy things.
Yeah, sometimes, but I mean, right now, is this the time?
No, I think it's the time to pay attention.
Mm.
Right? I think it's the time to pay attention. And then if you see an opportunity, bite. I think there might be some opportunities, but I think you need to let them kind of breathe a little bit before you bite. Right. So yeah, it's up to 5 million. Yeah, you know what I'm talking about. Yeah, I looked at that one. The problem is I don't know if it's going to be a rug or whatnot. That's why I'm not talking about it, Matt, because it's too new. It just launched today. But I would say like watch for that meta, right? That turtle meta may be coming. And why do I trench even though I may not be buying at the moment? Because I want to gauge risk, right? And the best way to gauge risk in crypto is see if the trenchers are trenching. And so you got to kind of pay attention. Are you guys actually building metas again? And I definitely see the turtle meta starting to build. So I'm like, all right, these guys might be building to something. And here's the thing. First movers, sometimes they're cookers. Sometimes it's a second or third. So that's why you got to give this meta time to kind of breathe and fan out a little bit. But I think that, you know, looking at that and looking at the trenches, it looks like they're starting to show a little bit of life, at least recently. I urge people to just kind of pay more attention to it right now than invest in it. But definitely, you know, keep your winners on deck and keep a list going so you can keep paying attention to it. Sometimes it's not bad to not be a participant and be an observer. Because observing can lead you to better opportunities sometimes, right? You're not part of the sheep or the crowd of the first mover that, you know, is going to wreck everybody later on. So you just got to kind of look for those opportunities, set up a list, and kind of watch the trenches and see how they're doing. But I definitely see risk starting to move. And every day that I've been kind of watching Rivian like this, the Rivian looks really, really good. Like this was my heavy spot where I really wanted to see price break above. We got the breakout. We're setting above it. I really think this is going to run. Like this looks like a really good setup. And so I like to use Rivian as a good kind of look towards risk on stocks. And then like even Aster has been looking pretty good too, right? We've been just kind of dipping below, holding this demand range right here pretty well. But if we take a look too. Like one other thing too that's been getting absolutely shit on was Lucid. Still kind of happening, but you can see some semblance of life now at this point where it's starting to peak back up. And I would say like with Lucid, for instance, like if you were even interested, like I would just kind of wait until it broke back above trend, because I still think that this is a strong trend, even though it broke trend. And you're kind of like at the bottom here. You broke trend to the downside, and likely if you start recovering back above this downtrend right here, you'll probably start swapping this way, just like what Rivian did, and you'll start building the opposite direction. But for now, it's kind of a sit and wait until Lucid can get back above this range, even though it's cheaper here, because you need confirmation, right? And if you start to see things like Lucid run and Rivian run, stocks are starting to get risk movement, right? Because there's not a lot of interest in EVs. So if EVs start running, that means there's really high risk on the table. And if there becomes really high risk on the table, well, guess what else comes with that? Crypto risk, right? We'll start to see the trenches revive. We start to see a lot of things start to move. So that's something else to kind of pay attention to. But we've been running for like an hour and 11 minutes. Do you have anything else you wanted to add there?
No, I mean, I know you mentioned Sui. I don't know if there was any others that you wanted to mention. And Mary's asking, I'm long Aster from 90 cents scaling out until 140 again.
Yeah. I mean, Aster's been a pretty straightforward trade. Again, just another one of those, right? You got your high end range. 140 is kind of high. I'd say like, 120 be a little bit safer. You could probably get the 140, but like what you want to look for is consistency across highs. Even though you got this higher high and you think you can go higher high, you've got pretty much consistent bottoms, right? So like you could play here. This is like an anomaly. So I would play more the mid range. I'd scale about 120 to be honest with you, just to be safe, right? You're especially in leverage. Again, just play level to level on leverage. Don't be like, I'm gonna leverage from here to $2, 250 Aster. Like that's the shit that wrecks most people in these markets. They're not playing level to level. They're trying to just run this all the way up, thinking they're gonna like take $500 to 5 million, and the market's not gonna let you do that shit. It's just not. You got to compound those gains. Definitely lock them in once you get them on those longs. All right, you got anything else you want to add?
I'm good. Thanks so much, Will. This was great. I learned a lot. Yeah.
Thank you. Thank you for coming in and definitely, giving your input. I think it helps a lot. Especially like it helps me too, because I always think like everybody's on the same level.
Yeah. I wish. I can't wait to get to your level. Well, I can't wait to be like, I see all of this.
Yeah, and again, I'm not saying like I'm the best trader in the world, but I definitely pay attention. I don't get stumped out by big moves. I know to look for rebounds and stuff like that. So I would say like definitely try and stay in there, pay attention, look at the charts, study, right?
Yeah,
and it's again, just run daily, weekly, monthlies, and then just look for your current ranges and just run those ranges. That's it, right? And if you miss the opportunity to get into a longer short, don't chase. Wait till the next one comes along.
Yeah, love it. Thanks so much, Will.
All right, thank you guys. Appreciate everybody who showed up this evening. Thank you guys again for running at the post. It's really appreciated. I know I really didn't expect that many people to kind of come through and hop on that, but I think a lot of people are just really confused right now with what's going on, and so I just wanted to kind of provide some clarity versus all the bullshit you see on Twitter with people talking up, down, round and round, and 35K Bitcoin, 350K Bitcoin, all these other random numbers. I'm just trying to give you guys a little bit more of a reality of like looking at this from what is going on and how to react in each range. But again, thank you all, and have a good evening.